And one thing led to another. A couple months later, that individual that was introduced to me said, "Hey, I got a couple different properties here, and they needed to 1031 exchange them out, and we got them in a fair deal. Didn't go to anybody else but us, and that's just purely because of relationships that are out there. So I hopefully that kind of gives you your listeners a little bit about what we do and what we try to spend our time on. So it's not for me, it's not about just building up the stack of cards. It's really focusing on those key 5 that can help me get our business to that next level.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Stephen Louie and Jenny Gu are both co-founders and managing partners at Vertical Street Ventures. They have acquired $90 million of commercial multifamily real estate in less than 1 year. From startup to $90 million in less than 1 year. It's an absolutely fascinating story. Looking forward to jumping in today. Jenny and Stephen, welcome to the show.
Great. Thanks for having us, Sam.
Thanks, Sam.
Hey, man, the to you both, the pleasure is mine. And again, as the interviewer, it's a little bit harder for me when there's 2 of you. So forgive me if I make some mistakes today as we kind of work through this podcast. I'm usually used to doing one-on-one, but there's 3 questions I ask everybody who comes on the show. Can you quickly tell us, where did you start? Where are you now? And how did you get there?
Sure, I'm happy to start. So I started working in corporate America for 13 years at a company called Procter & Gamble. Started with single family homes, like many of your listeners, I'm sure. Found the light, or saw the light at the end of the tunnel with multifamily due to scaling. Quickly jumped over, left my corporate job last year in February of 2020 and launched Vertical Street Ventures with Steve earlier this year. And that's what we do today. We focus on multifamily acquisitions.
And for myself, Sam, started just like Jenny in single family homes. So corporate America guy all my life, started as a financial underwriter and then worked my way out and climbed up the ladder to the corner office, I call it. And in between, about halfway through my career, I found my CPA introduced me into real estate and suggested that or inferred there's a lot of tax advantages to investing in real estate. So took advantage of that and started in single family homes, have actually this very similar portfolio to Jenny's. And then we connected through various meetups, and now have acquired quite a few multifamily apartment investments. So it's quite the team sport out there, and it's just great to meet folks like yourself, as well as my partner Jenny, through networking.
Yeah, absolutely. I'd love to dig into that story a little bit, because that's a common struggle I think that a lot of people have, because this is a team sport, right? Like, it's single family you can do on your own, if you want to wear a lot of hats and you want to work hard. But multifamily, man, there's too many moving pieces. And it's just one of those things that you've got to build out, the team either horizontally or vertically. And I guess I would ask you guys, how did that relationship transpire? And then at what point did you know that, hey, you know what, I think we can build something together?
Yeah, I actually, when I left my corporate job last year, my goal was to find somebody who I could shadow, essentially find a mentor, be their intern, for lack of a better word, and learn as quickly as I could to start scaling. And that's when I found Steve at one of these multifamily meetups. He was speaking at an event, met my husband. I met him a few weeks later, and we essentially spent the better part of last year working together, me helping him manage his properties in Arizona, underwriting deals every day. And him still working full time. It was a win-win situation because we took advantage of each other's strengths and weaknesses to improve, right? So that's kind of how we came to be, and decided, by the end of the year, this is a good relationship. We had interviewed each other for 6-9 months, and decided it was a good fit, and that's when we did our first project together, but didn't start the company until earlier this year, so waited a couple months after that.
Wow, that's cool. And Steve, are you still working in the corporate world, or are you out?
So I left at the end of 2020 to focus 100% of my time in multifamily. So, and just with that little focus, so it's hard to balance. I mean, a lot of times when you're in corporate, you're getting pulled in different directions, and that's what your responsibility is. And I'm always a fan of you have to do your job well where you're at, and great things will happen. And so just took the plunge at the end of 2020 and was able to really press forward and, with Jenny and myself, build an operation that helped build a team and an operation that allowed us to acquire apartments across the board and really have a presence in Arizona. So the focus was all really in one location, and we focused in Arizona, and that's where predominantly most of our growth is, Phoenix and Tucson.
Yeah, and speaking of Arizona, I don't know if you guys saw the Real Page report that came out. Was it yesterday? It was something about rent growth in Arizona. I think it was Phoenix in particular, and it was something like 22% year over year rent growth. I mean, that's just an astounding number for
Is
for a particular city. And I guess on that thought is, it's tough. It was tough in the bulk of 2021 for experienced operators to find and take down deals that make sense. What did you guys do differently or better that allowed you guys to, take down $90 million in deals in your first year?
Yeah, I'm happy to
Go ahead,
start.
Jenny. Yep.
I think it really is the relationship, right? And Steve actually leads a lot of our acquisition work, so I'll let him elaborate on this more. But being able to build a good relationship with brokers, not just brokers, everybody that is part of this team that you've built in order to get deals. So, in fact, we landed off-market deals from our lenders, right? Our loan partners, not just brokers. So it can appear anywhere. So you just got to make sure you're continually building those relationships and harvesting them.
When your loan partners, I mean, tell us maybe the snippet version of that story. How did your loan partner wind up with a lead for you on a deal?
Yeah. So when like Jenny had mentioned, everything is really based on relationships. My belief is that everybody can learn to underwrite, but really those that can take it to the next level, build relationships with brokers, lenders, all of the resources that are out there. So in this particular case, one of the things, and just by way of background, I don't think we touched on this. Both Jenny and I have a very strong corporate sales background. And so what that teaches you how to actually build the relationships. A lot of people out there are really just trying to network and grab cards and move on to the next person, grab a card, build my investor base. I'll grab the card from the broker. Oh, I'll call you later. There's so many different connection points that brokers and lenders like to see. And fortunately, one of my strengths that I play really strong at is really building a solid relationship with an individual. And so really, once you build that relationship, and relationship is built on trust. And once they trust you that you're going to follow through, you can close opportunities, you don't retrade often. And then you ultimately make their lives easier in terms of that whole process. They'll want to do business with you. So I think a couple of the incidents is one, the broker that we've done 6 deals with, they give us off-market deals. They give them, and truly off-market, where maybe it's a handful of individuals only get those, and then we get the chance to bid on them if they make sense. Right. And then relative to your question around the lender, just a great relationship. I asked him, was there anybody that you just recently worked with that has any loans out there, or any that are going to be potentially coming off and expiring? And he's like, yeah, there's a person that you should just actually meet and introduce. I'll introduce you to him. Not thinking it was going to lead to anything. We connected, had some drinks, and one thing led to another. A couple months later, that individual that was introduced to me said, hey, I got a couple different properties here, and they needed to 1031 exchange them out, and we got them in a fair deal. Didn't go to anybody else but us. And that's just purely because of relationships that are out there. So I hopefully that kind of gives you your listeners a little bit about what we do and what we try to spend our time on. So it's not for me, it's not about just building up the stack of cards. It's really focusing on those key 5 that can help me get our business to the next level.
I think that was a great question, that you asked the lender, which is any loans coming due, anything, coming up for renewal. Is there anything that is out there where someone may be, looking to offload that know about? I mean, that's a brilliant source, and probably not one I've heard, too much about on that front. So, that's a great question. So talk to us about your goals. One of the things I know that you guys set out for was a certain goal as far as dollar amounts of deals you're going to take down this year. Can you tell us what that goal was? Because I've not mentioned that yet. And then tell us, at what point you're like, oh wait, we may have, written that goal a little too small.
Absolutely. So we launched this company back in January of this year with a goal of acquiring $25 million in assets. Now, mind you, we, threw a number to the wall because coming out of COVID, we just didn't know,
Right.
what was going to happen.
Right.
So we set out with 25 million, and by the end of first quarter, we had acquired a property that put us, almost halfway to that goal. And we said, you know what? We might be selling ourselves a little bit short. And come the middle of the year, we were already, blowing past our goal with more on the way. So we ended the year with 90 million, which is, so much higher than what we anticipated. We want to double that next year or more. And then we also want to do other things to improve the communities that we purchase. We want it, it's a human business. We work closely with everybody, including our residents. And so one of the things we're looking to do is launching a nonprofit sometime next year to see, what else we could do to help the communities, whether it's the kids or the parents, the adults, what have you. We're still fine tuning that, but that's something we're really passionate about. And then, we also have a passion to help others gain financial independence, similar to how we've done it. And so we've launched an academy focusing on the Arizona marketplace for people who want to learn how to be syndicators, how to be operators in a market that we're very strong in. So we've just launched that. We're trying to make that bigger and better next year. So those are just three of the big things that we're trying to work on.
And again, going back to the team sport and being that this is, there's a lot of moving pieces here. How have you been able to scale so quickly, and yet, master those pieces of the equation, and still think, hey, we're going to go nonprofit. Hey, we're going to go, start an academy. I mean, those are a lot of very different, moving parts. And because this is a very intensive, at least hands-on intensive business, what have been some things you guys have done this year to allow you to buy an asset, get it streamlined, and then set it and not forget it, but set it on, at least make it run like a machine and then move on to the next?
Yeah, we don't sleep. No, I'm just kidding. As Steve mentioned, we have really good, strong sales backgrounds in our previous lives, from people management all the way to strategy, project management, running regions and businesses. So building a team is something we're very good at. Now, obviously, we bootstrapped the first couple months just to launch a startup, but we quickly hired an underwriter, a tech person to help us build our systems and foundations. We've now hired a virtual assistant to help with the day-to-day tasks that we don't want to do, so we can focus on strategy. We've also expanded to marketing and investor relations person we've added to the team. And then, our spouses, right? So that marketing person happens to be my husband. He left corporate America as well. Steve's wife, Rebecca, has joined the team to help funnel some of that work to her. And now we've just hired on our first asset manager, right, to manage all these properties we've acquired. So we read, both Steve and I read the book Who Not How by Dan Sullivan. Awesome book to help drive us into, hiring and outsourcing the work that we don't like to do and may not necessarily be the greatest at, so that we can focus on things we enjoy and are good at.
Right. Yeah, that's fantastic. And having that kind of plan from the beginning, I think is something a lot of us, I know myself, certainly in my, real estate career, has lacked, where it's like, oh, hey, we're going to do this and this and this. How did you guys set aside a certain amount of funding up front, where you said, hey, we're going to set aside, whatever it is, 300 grand or 500 grand, whatever it is, in order to know that we have the runway to take off, hire the right team members, and build the team effectively? Or was it just, hey, we need this person, cost be damned, let's go?
Yeah, we were very fortunate that we were very fortunate to come off of pretty high paying jobs from a corporate America standpoint. And then also, as our first acquisitions came in, I think we had 3 within the first couple months.
Right.
And so what happens with that, you do have some capital. Then with capital, what that allows you to do is really consistently plan. One of the things that Jenny and I really specifically do, we have monthly meetings, weekly meetings, really to go through all the tasks that need to be divvied out amongst the entire team, and then monthly and quarterly meetings just to figure out what we need to do. And that goes for everything, just to add on to what Jenny was saying. We got an HRIS system, a human resource information system that's in there. We have payroll all set up. So all of those little things have a complete accounting system. A lot of those things are typically after I get the business running, I'm going to do that.
Right.
I would highly recommend to any of your listeners that you start that from the beginning. And if you start those processes and you have some of that in place, and the websites and all those good things like we talked about at the beginning, that will allow you the opportunity to focus on what your strengths are, whether it be acquisition or asset management, that we're both capable of doing. And the great thing is both Jenny and I are technical and have that kind of extroverted personality that when it needs to come out. And so we can actually play in each other's shoes if we have to. So if Jenny has to take a week off, I can to pick up on the things that she needs to, and vice versa, very, very easily.
Right. That's fantastic. Did you guys do any, and I know we talked about this a little bit, but I'm just curious, did you do any strength finders or, disc tests or things like that ahead of time to see like, okay, what is it that you, Steve, do? What is it that Jenny, do? I mean, did you guys, what does that look like?
Yeah, I'm a total nerd with all that stuff. So we've done strength finders, we've done Enneagram, the DISC assessment. All of them tell you something a little bit different. So they're not all the same.
Sure.
But it's fun because again, when you build a team, you want to find folks that are going to complement you and your skill set or fill in a gap that you're lacking. That is the best and fastest way to scale and accelerate your business.
Right. Yeah, that's a great point there. Man, this is fantastic. I've loved what we've learned today. You guys have transitioned out of corporate America, which congrats. That's a big leap. You've been able to take the skills you've learned in corporate America, and bring them over into this business, which is really cool. You had a goal of 25 million. You went to 90 million this year. You're scaling your team, your market. You guys are doing awesome stuff. And I look forward to just tracking your progress here in the next few years. Although it's been short, I got one final question before we jump into the final four. Is there anything you would do differently in the last 12 months that maybe would have changed, accelerated, or allowed you to do things a little bit better?
Yeah, I would say it goes back to the building systems. So, yes, we started out building certain systems, but we probably shortchanged ourselves or thought we could piecemeal things that now we're having to go back and redo, which is time and effort, right? So for folks starting over, if I had to do it over, I would do all of the things I just said, in the first 6 months, because we've grown so fast. Now we're trying to catch up a little bit to make sure that we don't have a bottleneck somewhere. So that's something I would do. Figure out the systems you need, plan for your growth, and set up the systems up front so you can achieve it.
Mm-hmm.
Yeah, I would agree. Firm foundation. You got to build a foundation that is super strong. If you want to get into a specific, even accounting. So accounting is so crucial. And so hire a bookkeeper, hire an accountant, hire a CPA immediately. I know it seems like it might be somewhat expensive or redundant, but once all those receipts and everything start piling up, the longer and longer you wait, the longer and longer it is you're going to be spending time trying to get that done. And I'm not, and coming from corporate, people took care of that stuff for us. So here's the receipts that we had on the trips that we went to. We just gave it over to them, and the expense report was produced. Now we're in the midst of it. So I would say get a great accounting bookkeeping system in place.
Yeah, and that's especially tough. I mean, and one thing people don't think about, especially starting out, is that for each asset, especially if you're doing single asset LLCs and not doing a fund, it's a brand new company. Yes. I mean, this is a brand new bank account. These are brand new, filings. You're brand new. It's a whole new set of tax returns. I mean, for each and every asset you buy. Mm-hmm. And so to your point, Steve, if you don't have that nailed from the get-go, It's gonna get bad upon worse upon terrible if you're not if you're not
Yeah.
right in front of it. So that's fantastic. Final 4 questions for you here are this: what is one tool or resource you find you cannot live without?
Oh gosh. Um, my phone. Does that qualify?
Sure, it's your answer, not mine.
Yeah, I would say I would be lost without my phone because of all the technology that I use on a daily basis for communicating, for research, for managing my properties. Yeah, I don't know what I would do without it.
That's awesome. Any answer from you, Steve?
It would be a CRM, right? So, we have so many different contacts, a CRM that can actually track who you spoke with and when.
Right. Yeah, absolutely. Absolutely. Question number 2 is this: if you could help our listeners avoid one mistake in real estate, what would it be and how would you avoid it?
I would say not necessarily a mistake that I've experienced, but I've seen other folks come across is not building your right team.
Mm,
So jumping in too quickly with partners before you're truly vetting them out, I
right.
think will cause a lot of headache and heartburn quickly later on, if that's not done right.
Exactly. Choose your partner wisely. And so you really do have to vet that out. A lot of times we all want to jump in. Oh, I got this deal in Atlanta, and let's go do it, Sam. And boom, yeah, we haven't even we haven't even said hello yet, and we haven't even talked yet. So
Right.
I think a lot of it because of the fear of missing out in the environment that we're in, and it is such a team sport. A lot of times we're jumping into the situation with somebody that we maybe actually be identical to us, and that might not be a good thing. So, like Jenny said, you want to have some complementary skill sets.
Right. Yeah, absolutely. And to expound upon that a little bit, I mean, that's one of the things, we always say that the first thing you vet, of course, in a deal is the team.
Yep.
And, I'm sure you guys get a lot of deals that come across your desk. I'm a passive investor in a lot of other people's deals. And that's the first thing I look at is, well, most of the time I already know you anyway. So I don't need to worry about that, but I still see a lot of deals and I go, gosh, the composition of this team is that's crazy. Like, I mean, I can look at it from the outside and say, there's way too many of you and you guys all don't know each other very well. This is just not going to end well. So my capital certainly is not getting deployed there. And I bet that smell test doesn't pass a lot of other people's as well. So I really like what you're saying there about building a team. Question number 3, and you kind of already talked on this, Jenny, but what is one thing you're doing right now to make the world a better place?
We have done, since our properties we've taken over, we try to do community events as often as we can to build that community, then also drive on the investor side retention as well. So we're trying to do things that could drive a win-win situation. But yeah, separately, we're going to launch a nonprofit next year so that we can just blow that up, gangbusters as well. So more to come on that, but that's one of our big goals for next year.
Right. I love it. If our listeners want to get in touch with you or learn more about you, what is the best way to do that?
Sure. You could visit our website, verticalstreetventures.com, and then we're on all social media platforms, Facebook, Instagram, and Twitter.
Awesome. Thank you so much for your time today. I do appreciate it.
Thanks for having us.
How to Scale Commercial Real Estate Podcast. If you can do me a favor and subscribe and leave us a review on Apple Podcasts, Spotify, Google Podcasts, whatever platform it is you use to listen, if you can do that for us, that would be a fantastic help to the show. It helps us both attract new listeners as well as rank higher on those directories. So appreciate you listening. Thanks so much and hope to catch you on the next episode.